Good morning, trading world. It is October 7th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. It's just before 7:20 a.m. on the East Coast. We have a very important news drop before the open this morning. We have the employment situation. Will this be good news? Or I should say it like this: will good news be bad news, or will bad news be good news when it comes to this employment situation report? We will find out at 8:30 a.m. I keep saying the Fed is going to keep pushing until something breaks, and the employment situation is going to let us know if that something is breaking yet. In normal worlds, low employment rates are good for the economy. But right now it seems we are in bizarro world with the Fed as the main villain. Everyone knows the Fed has to keep pushing rates up to fight inflation. But the higher the rates go, the less inclined business is to grow. That slump in business will be seen in employment rates as businesses cut back to deal with higher cost of capital and slower growth. So the quicker we get to this point of stagnated growth and higher unemployment rates, investors feel like that will slow the Fed down from pushing the rate hike button. Hence, bad news is good news. On the other hand, if employment rates continue to be low, investors feel there is no reason for the Fed to slow down. Hence, good news becomes bad news. This will be the biggest clue to rate hike direction until the next FOMC announcement. You know, it's going to be a big boy day because the market makers' expected move started out at plus or minus 12 at the beginning of the week. And on today alone, it is plus or minus about 6. The VIX is still on the edge, and I haven't seen one of these days where VIX continues to raise on a rally, letting you know things are completely off its rocker. If you think we are anywhere near the end, here is an article to let you know just how bad things are. There's a link to the article in the description, but the Bank of England had to step in to save their pension fund. It was moments away from being completely insolvent. That should give you a clue how bad things are around the world right now. Just don't feel it seems like after whatever happens on the employment situation, we may still have some bullish move still in the plans. Let's get to the key levels for today. Alright, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 374 to the 376 area. Queen resistance is going to be 377 to the 379 area, and then king resistance is 380 all the way up to the 386 area. On the support side, we have our jack support at 372 to the 371 area, queen support 370 to the 368 area, and then king support 367 to the 364 area. The main thesis for today is bearish, closing below the 373.20 with a projected target low of between 372 and 364. Our alternate thesis is bullish, closing above the 373.20 with a projected target high between 374 and 386. The current major channel we are in is 364 all the way up to 379. The major channel above is 379 up to 397. We have a small bearish bias on the quant side. There is also a bearish bias on the technicals. But on a day like today, none of it matters because everything is going to be based on the employment situation news. That brings us, or before we get to the scenarios of the day, that news alone could set us up for a super explosive alternate thesis, meaning we could not only have a bullish day, but we can have a super takeoff like a rocket trend day to the upside based on the employment news. So we want to be very, very careful of that. All right, let's get to the scenarios of the day. All right, our first and most probable scenario is going to be our trend day up, which means we would have to open gap up. And because of the employment situation being just, well, around 8:30, that would mean we would have a huge spike up on the employment situation coming into the cash open. We would start to consolidate and move down to sideways a bit after the open, and then catch out again in our golden window time frame, huge uptrend. We will find our midday chop somewhere around the queen or king resistance area, and usually coming out of the second half of the day, we usually have a head fake that looks to continue the morning's trend, and usually we find that retrace going into the close, but we would have, I would say, more of a continuation up throughout the majority of the day. If we get bad news or it shows that the employment situation is beginning to become unraveled or ticking up. So that bad news is good news. And there are signs that it is happening. I don't know if you're paying attention to where you live, but there are signs. I do have to give a vice versa alert. And that vice versa alert is going to be the complete opposite, which means we would have a trend day down. That trend day down would start with a huge spike down on the employment situation news. So we would get that spike down, and then after the cash open, we would see a pop back towards the previous close, but somewhere before that previous close, we would find resistance. And finding that resistance, we would continue down with our golden window trade to the downside. We would find our midday chop somewhere between the queen and king support area. Second half of the day, you get the head fake. Like we want to continue the trend from the morning, and we could possibly see continued down and then maybe a pop or rally into the close. So that's our most probable scenario today. And as you can see, all morning, or as we get closer, things kind of tighten, compress. Everybody is waiting on this news. So I'm thinking we still have some upside left. So this trend day up is going to be one of our most probable scenarios of the day. Let's get to the next scenario. All right, our next scenario is going to be our expanded range day structure. We could have a pop off of the news, find resistance, and start to consolidate before getting a drop back down, before starting to tape back off to the upside. So that's going to be our expanded range day structure. Remember, anytime we deal with a range day, whether expanded or just any type of range day, it means that we're going to cross and close on both sides of the close during both sides of the previous close during the day at some point. And we're going to find a boundary either to the low side or to the high side, and usually chop between. But on an expanded range day, we're going to push one side, one of those boundaries. So that's scenario number 2. Let's get to scenario number 3. All right, in scenario number 3, we have our rounded reversal day type structure. We could get a continued push lower after that spike down from the employment situation, which brings us to the cash open, where we get that continued push lower toward the jack or queen support area. We find midday chop around either the queen or king support before spending the same energy we use going down to go back up the second half of the day. I wouldn't be surprised if we had 2 plays off of this. Our midday chop could become a midday drop. And then our vice versa alert would be if we got a pop up, a strong pop up off of the employment situation, and then we kept going up after the cash open. And we would find our midday chop either around the queen or king resistance area, and then the second half of the day we would pretty much come down with the same force we went up with the first part of the day. So that's our vice versa alert on the rounded reversal day type structure. This will be a very explosive day. Make no doubts about it. So you need to be extra careful of your risks this morning. Remember, your most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. So I made a statement in a previous pre-market this week. Don't get lulled to sleep. We've been having these 2 standard deviation moves kind of on a norm where it's kind of, lulled everyone to sleep like this is the norm. We've been desensitized to it. So you're much much more aligned to put on more risk because you've gotten desensitized to these moves. And because of the size of these moves, you don't have to put on as much or your normal account size to make the same amount of money. You can pretty much cut your allocation size in half to make the same amount of money that you've been making because of these outside moves. So just be aware of that. I hope this helps. As always, wishing you a positive trading day. Have a great one.